Now, what I'd like to talk about is what I call the 10 most dangerous things people say about stocks. Here's a good one. If it's gone down this much already, it can't go any lower. I remember when Polaroid went from 140 to about 107, and people said, if you ever get Polaroid under 100, got to buy it. You just back up the truck, buy the stock. Stock could get to 110, then rally, fall 103, go 112, go 105. They said, gets under 100, buy Polaroid. Polaroid broke 100, people started buying it, and within 9 months, the stock was 18. I saw the same thing with Avon Products. So just saying, it's gone down this far, how much lower? I mean, it's crazy, but, it can keep going. In fact, I tried this out. Kaiser Industries, I was a new analyst at Fidelity, and we were about to buy the biggest block ever at Kaiser Industries. The stock had gone from 29 to 17. We're about to buy the largest block ever in the history of the American Stock Exchange. We bought, 10 or 15 million shares. At 15.75, I said, my God, the stock's gone from 29 to 17. How much lower can it go? So we bought this enormous block at 15.75. So I called my mother and I said, Mom, I guess stock at Kaiser Industries, it's 10. So about 3 months later, I said, you ought to buy this. It's gone from 29 to 10. How much lower can it go? Well, it went to 9, it went to 8, it went to 7, it went to 6, it went to 5, it went to 4. Now, fortunately for me, this happened very rapidly, or I'd be working at the Stop and Shop bag and behind the line at Fidelity. So fortunately, this was compressed in only about 6 months. So I had to go to the fund manager and say, I was a little bit early on this at 15.75. We call this premature in the business. I had a correction, which is a euphemism for losing a lot of money rapidly. So I said, let's check this again. The stock's 4. They own 45% of Kaiser Aluminum. They own 59% of Kaiser Steel. They own 38% of Kaiser Cement. They own all of Kaiser Electronics, all of Kaiser Broadcasting, which had 7 TV sets. They own Jeep. They had Kaiser Fiberglass. I said about Kaiser Sand and Gravel. They had a bunch of other Kaisers. And they had no debt. Now, in this room, because I know Freeman Billings is very interested in financial stocks, no one's ever gone bankrupt without any debt. Now, that would take a real, I think you have to give some kind of distinguished service award to somebody who did that. But they had no debt. And I said, it's not going to go to 0. I was wrong when I said it can't go below 15. So we hung on, and within 3 years, they gave out the shares in Kaiser Steel, gave out the shares in Kaiser Cement, gave out the shares in Kaiser Steel and Aluminum, and they sold off all the businesses. You got out $55 a share. But if you didn't know the story, and the stock went from 15 to 11, and you're just saying how much lower can it go, when it went to 9, went to 8, you would have gone. So you can't just say it can't go any lower, because I saw Taco Bell go from 14 to 1 in 1974, and they had no debt and making 60 cents a share. There's a corollary to that that's even more dangerous. If it's gone this high already, how can it possibly go lower? Higher, sorry. That. Philip Morris, adjusted for splits, sold for 12 cents in 1951. And then it goes to 60 cents in 1961. So it goes up 5-fold, and you say to yourself, how much, this it never sold for that, but just for splits, you say, how much higher can this go? It's gone up 5-fold. They missed the power of Marlboro. They missed there's 220 countries in the world. They missed the cash flow of the company. They missed everything. This stock was a 100-bagger after going up 5-fold. But people sold it just saying, how much higher can it go? Can't go any higher. They did the same at Home Depot. They did the same with Toys R Us. I did the same thing at Toys R Us. Just saying it can't go any higher, it's gone this much already, that's very dangerous, and don't use that one. And it's a very bad thing to do. Eventually, they always come back. Here's another one that sucks. That's a technical stock market term we just use only in the stock market. The RCA just about got back to its 1929 price when it was backed out by GE. Manville never came back. International Harvester, even with its name changed and adjusted for splits, hasn't got all the way back yet. Western Union. Double knits, remember those wonderful things, floppy disks? They don't have to come back. But they say eventually they always come back. Not true. Here's a great one. It's $3. How much can I lose? This is a great one. You see, get out, this is, I don't have a computer and I can't do high-level math, but just do this one. So let's say your neighbor buys $10,000 of a stock at 50, and the stock's now 3, and you put $25,000 in at 3, if it goes to 0, who loses the most? A lot of people cannot answer this question, I mean, if you put $1 billion in at 3, you can lose $1 billion. I mean, they blow taps on lots of companies every year. You know, you just have, they can go to zero. Here's a good one that helped me a lot. It's always darkest before the dawn. This business is terrible. It's awful. You ought to buy the group. This is not a good way of making money. Here's one you're probably talking about before lunch, freight car deliveries. In 1979, there was 96,000 freight cars delivered in the United States. 2 years later, it fell to 45,000, the lowest in 23 years. So it goes from 96,000 to 45,000. People say business is awful, it's horrible, pathetic. Then it falls to 25,000. They say, just load up. There's about 15 opportunities to lose money. There's about 15 suppliers of freight cars, 15 manufacturers. Business was awful. Well, last year we shipped 7,000 freight cars in the United States. The business just continued to be miserable. And I'll give you one that's there's even greater opportunity to lose money on. Energy services industry. This, we all had a great opportunity to get our heads handed to us. In 1982, there was 11,000 of those oil rigs drilling those holes all over Oklahoma and Texas and Colorado. We used to have the rig count every week. And the rig count fell from 11,000 in 82 to 6,000 in 83. Then it fell a little bit lower in 84. And there's hundreds and hundreds of companies here. Companies that made the muds and did the downhole stuff, the fracturing companies, the well companies, all the measurement companies, the Schlumbergers, the bid companies. Lots of opportunities to lose money here. There's an equal opportunity here for serious losses. And the people said, listen, the business is terrible, let's buy these groups. Well, the rig count was only 1,000 3 years ago. So it went from 11,000 to 6,000 to 5,000, then 8 years later it was under 1,000. The industry really started to turn about 2 years ago. So just saying the business can't get worse. I was lucky enough, in addition to having the metals industry when I started Fidelity, I had the textile industry, which is a great group to follow, because you follow companies like J.P. Stevens, who was founded in the 18th century, and West Point Pepperell was founded in the 18th century. Burlington Industries was one of the new companies that was founded in 1904. These people have been through recessions, depressions, world wars. They've seen it all. There's a great expression in the textile industry. It's always darkest before pitch black. Now that's a good one to remember, because when business is terrible, it can get considerably terrible. It can get terrible to the power of 6. And